Morning, folks. Welcome to the second episode of the Finmet Mondays podcast. Joining me today is Sunil. Sunil, a very warm welcome to you. Our first episode together for this year. Both gold and silver have started off on a fantastic note. For this year, they are seeing record highs every week. We tune in, we see the markets hitting new highs. But I want to turn our attention to silver mainly. Silver has been overperforming uh, comparatively to gold. Is there some downside risk now that comes into play when we're looking at these highs that silver is hitting? What do you think that our participants should be aware of when navigating their own positions in silver and how to tread these silver markets?
We have seen silver go up almost 80% in the last 4 months or so. And I think the overall commentary we're getting from key market participants and analysts is that this momentum is going to continue. We're going to see the next target of $100. And then people are even talking about doubling from this level. But I wanted to take this opportunity really to emphasize a few things that some of our listeners should be looking at and watching out for that may give a signal that the bull run may come to an end. And I'll give you three factors that people need to be aware of. Firstly, if you look at gold, when gold reached its target of $4,000, after that, the move up over the last 3 or 4 months has been pretty organized and pretty slow. We've moved up 15% or so. In the same time, silver has, when it broke 50, has moved up 80%. So I think the key thing you should look out for is if it does reach that $100 target that everybody's looking for, what will happen after that? Will it pull back? And then I think further progress may be slowed because most people have reached the target that they were seeking. So I think that's one point to be concerned about. The second thing that needs to be looked at is the technical analysis. So right now, the gold-silver ratio is close to 50, which is sort of the long-term low level at which people start buying gold and selling silver. We had seen a gold-silver ratio as high as 117 about 8 months ago. And that was a clear signal that silver was undervalued. But I think at a gold-silver ratio of 50, we're reaching a situation where it is overvalued compared to gold. And so therefore, there are a lot of technical speculators, technical investors who may look at this silver ratio and say, okay, now I need to take profits and I'll sell out. So I think that's the second thing you should be looking at is the gold-silver ratio. If it dips below 50, that may be a signal that people start taking profits. And the last thing people need to be aware of is the unprecedented levels of physical silver sitting in New York. So almost 70% of the short positions on silver in COMEX are backed by physical metal. And typically that ratio is as low as 20%. So we're 3 times the normal. And the reason people are keeping silver against their short futures positions is because there's a concern that if the buyers want silver, if there are tariffs, silver would not be able to get imported. And so that will be a problem. So any signal from the regulators or from the Supreme Court or anything that shows that silver tariffs are not a concern, silver deliveries are not a concern, would mean that people will take physical metal out of New York. And that may be the beginning of unwinding of the physical silver trade, at least. So I think these three factors are risk factors for silver on the downside.
Thanks a lot, Sunil. Let's see how the markets play out this week. But till then, thank you so much and goodbye.